What is up, y'all? Welcome to the Bitcoin Stock Show live stream. I am your host, Colin Harper, editor in chief at Blockspace Media. Thank you so much for your patience. We appreciate y'all tuning in with us today. We've got a fantastic conversation queued up with Tom Massaro of Kungsleden, acquired by Cathedra. So he is currently working at Cathedra with the fine folks over there. And we're going to be talking all about AI and HPC markets, making sense of some of the hype around stocks like NVIDIA and the Bitcoin miners that are pivoting towards AI and HPC, and just trying to get a general sense for what exactly this market looks like. It's burgeoning, it's incipient, it is very much in its infancy, and there's a lot of hype to wade through, and Tom is the perfect guest to do that. So without further ado, I'm going to add Tom to the stage. Tom, welcome to the Bitcoin Stock Show, man. How you doing?
Good, Colin. Good to be with you, man.
Yeah, thanks for coming on. So, before we dive into some of the nitty-gritty questions that I have, would love to just get a quick bio from you and some background, how you found yourself at Cathedra by way of Kungsleden. And yeah, take it away.
Sure. I think with many people in Bitcoin mining, you come at it from a lot of different directions. A lot of folks in mining have very different backgrounds. I started out in the class of 2017, 2018. So we got into mining right at the top of that last bull cycle and helped start a company called Great American Mining, which was one of the, I would say, first three off-grid mining companies, and then left there in the fall of 2021 and went to work with the guys at Cathedra, helped them do biz dev, and then along the way, became radically opposed to having anything to do with ASICs. But I still loved the mining game. I still loved the idea of scaling, especially in the U.S. after the Chinese exodus happened. Saw a massive opportunity for Bitcoin mining to grow here, and started building out an infrastructure company, to really simplify things, a hosting company, because we knew there was a influx of ASICs that didn't have a place to be plugged in. So started it with my partner in late 2022 and grew that. And then we just did a reverse merger with the guys at Cathedra. So kind of full circle is now complete. And we got the gang back together and looking forward to growing it with everybody.
Yeah, that's funny. I forgot about you being at Great American Mining, and it's almost like you're moving from one pioneering sector within Bitcoin mining, right, which was off-grid mining. No one really knew what it was at the time. It became a huge, obviously, narrative piece with a lot of Bitcoiners during the last cycle. Everyone loves talking about utilizing stranded energy. We love to have the reducing emissions line for the people who think that we're boiling the oceans. And now you've moved towards this very new and extremely misunderstood vertical within HPC and AI. So I guess to lay the groundwork, there are kind of, I think, two introductory questions just to kind of get everyone up to speed. First of all, what goes into an AI and HPC data center? And what are some of the differences between the different models that we've seen? Because I think like Bitcoin mining, AI and HPC, and by HPC, I mean high performance computing for those not aware of the jargon, people kind of look at these things almost as like a monolithic thing where there's almost they think of like a massive data center like that Google's running, right? But there are so many different ways that that companies can approach the AI and HPC market. So can you break down some of the differences and strategies that we've seen? I mean, you don't need to go through all of them, but just some
Sure.
of the different ways that companies have tried to stand up data centers, because like I said, there's something very different about a mega center that Google, like a mega cloud center that Google runs, and a smaller data center, like maybe the TerraGo model, and TerraGo being a data center company that Hut 8 purchased in 2022. So what are some of the differences in scale that we see in the market and how they operate?
Yeah, I think it really boils down. If you just look at the device, it's like device oriented, right? So, your GPUs originally, there was a lot of crossover. So if you had 4090s or kind of like late generation GPUs, you could make them work in a Bitcoin mining environment, which a lot of folks are doing with Ethereum before proof of stake came along. And then just as easily, they could operate in a traditional data center environment. And so when you think of two polar opposite ends of the world as far as one of them, what are they an environment looks like, very very different, right? When you think of a tier 5 data center, top of the line. You're thinking, okay, these guys have a facility. I mean, I've seen facilities that are literally underground, built into caverns, to make sure the data is safe. Well, with GPU compute as well as Bitcoin mining, there is no data. It's more of a compute thing. So, for compute, you're dealing with more of a heat density problem with, in a very small, specific kind of like a footprint. And so, for the most part, Bitcoin miners are able to solve that aspect of compute, or we've been trying to solve that aspect of compute a little bit longer. So there are elements of HPC AI that a Bitcoin miner is really, really set up perfectly to handle. But then there are other parts of GPU, which you're talking all of the networking, and like some of the fiber optics that are involved, and then more importantly, where the newer generation of machines are going. So H100s, the new Blackwell chips that are coming out, are orders of magnitude more complex, more what's the right word I'm looking for here? Very fragile, like in terms of the environment.
They're
that you
more
need to
high
run them.
maintenance. Like they
Yeah,
need a lot of they
yes,
need a
yes,
lot
yes.
of infrastructure. They need to be
Right
groomed
down to the
properly.
spec. Exactly.
Okay.
Whereas miners in the past would kind of like wildcat it. We'd be like, why do you need filters? Who needs filters? Do you need water cooling? You know what I mean? Like there's all of these aspects. And I think, there will be different subsets of GPU compute that will fit different categories. So right now you've got folks who just will find a customer who has GPUs, or maybe even buy some GPUs, and then they'll find a co-location place to plug some in, and then they'll just make a spread. Then there are folks who are building out what is considered like a tier 3 level data center, and you're talking, just to get like a rough idea of cost, right? Like a budget oriented air cooled Bitcoin mining facility is around, to build one is, I would say at the bottom is like 150K per megawatt. Immersion at the top of the bull market, you were seeing anywhere from like 700K to $1 million a megawatt at the very, very high end for Bitcoin mining. For GPU, specifically like a tier 3 data center plus, you're looking at 10 million plus a megawatt. So the capex costs are dramatically different. The specs are different. But in my opinion, I think there's a lot of shaking out that needs to happen, because folks are applying the specs for what like the data center specifications should be, but that's not what the computes are. Like a lot of these guys who are doing compute are not running them all the time. They are running inference. So there's differences in terms of like how they would run versus a traditional data center. And so that's where I think eventually the market is going to come to Bitcoin miners, meaning someone who owns ASICs or is training a model will say, look, I don't want to pay, or two things. I don't want to pay an exorbitant premium to stack them in this very nice facility if I don't necessarily need to. And more importantly, the wait time, because rack space is getting condensed, because there are a lot of backlogs. They're going to say, okay, well, wait a minute. Can I get it for a quarter of the cost and get it just as good, or like near like a certain percentage of what they need? And I think that's where the market will shake out, because eventually there's just not enough power and there's not enough rack space right now.
Okay, a lot of directions we can go here.
Mm-hmm.
That was a really good introduction. I want to kind of focus in for a second. I want to put a pin on one thing really quickly and then return to it, with the mullet miner thesis, which I think you basically just described. But I just very quickly to kind of set some definitions. When you're talking about tier 5, tier 3 data centers, my unga boonga understanding of what that is basically the higher the tier, the more uptime you need. And so like when you get to the highest tier, right, we're talking about data centers that are offline for not even an hour a year, right? Like you're getting to the point where you have so much redundancy in place that thing is never going down.
Right.
Is that correct? Is that kind of directionally correct?
Like redundancy on like every levels, and multiple
Okay.
backups of redundancy.
So a tier 5 data center would be basically 100% uptime, 99.9999 whatever percent
5
uptime,
nines. Yep.
crazy capital, and that would be maybe one of your Amazon or Google data centers, right?
Mm-hmm.
Something that is underpinning critical infrastructure on the web, right? That if it goes down, people can't do their jobs, people can't access necessary files, things like that. Is that the correct understanding?
Yep.
Okay, so where would the Bitcoin miners who or where would the model fall for the miners who are going to have a lesser tiered data center? What kind of another way to put it? What kind of services would that compute be um, furnishing? What kind of buyers would there be for that compute? In other words, like if you're going to be a Bitcoin miner and you're not always going to be running your GPUs for these AI and HPC data loads, or compute loads, excuse me, what kind of services are we talking about and what kind of customers for that compute? I know that might be kind of hard, but just if you could
Yeah.
roughly give an idea of what kind of things these are going to be, because I think that's a layer of abstraction for a lot of people.
Hmm.
It's kind of like the same way that, I mean, there's so many parallels with energy. It makes sense why Bitcoin miners are getting into this. People turn on their light switch. They don't know if that energy is coming from a nat gas plant. They don't know if it's coming from a
Hmm.
wind farm, solar farm. They have no idea. Every kilowatt is a kilowatt, and that entire flow is abstracted. And the internet is very similar. So for these services that don't have to be online all the time, what are we looking at?
Yeah, so I think like I come at it. There's two hats you can wear, right? You can come at it from a perspective of like for myself, right? Like I don't want exposure to the underlying ASIC or GPU, so I think about it from the customer. Who's the type of customer that would fit that mode? The other mode though is some folks, some public miners have taken exposure to those GPUs, have bought GPUs, and then they'll either go find a customer for them and lease out a certain amount of like compute time, and then or they'll leverage online kind of cloud compute platforms, which makes it like an on-demand ability for someone developing models to do like in a retail-based environment. And so depending on which model that you go for, I think that will dictate like the route of how complex or how creative you want to get. Like for me, if I'm looking at developing a site, let's say 15 megawatt or let's just say 20 megawatt site, and I want to run both, I want to run Bitcoin and AI, I would probably try to figure out the best combination of where our flexibility can come in with running Bitcoin, that they'll give us breaks with the power company to do demand response, and then have the ability still to go for the most part full tilt and not have to deal with demand response for the AI HPC side of things. A lot of this has not been completely worked out yet. The
Mm.
business model around HPC AI compute is still yet to be, I think, determined in terms of like, are these good businesses long term? I mean, if you think about the biggest customer in the space right now is CoreWeave, right? They signed this big deal with Core. They're obviously one of NVIDIA's biggest clients, but they don't really have, there's not a lot of history with them. They just raised a lot of money and they bought a lot of GPUs. That sounds history. That sounds like a little reminiscent of Bitcoin cycles and stuff. So,
Right.
will they be around in the future? What other type of buyers are out there? What other type of clients are out there? That's yet to be determined, I think.
So that's an interesting point to make about CoreWeave, because at least with the Bitcoin miners, if we can give some of them some grace, after they go on a buying spree, purchasing ASICs after,
Hmm.
a quarter of dilution or taking on just obscene amounts of debt to stand up a data center, the buyer is either the Bitcoin network directly or a mining pool. So like
Right.
the liquidity is really there for the compute that they're going to be producing. And like you said, it's just pure compute. It's not data. They're not
Right.
storing anything. They're just producing hashes, trying to produce blocks. But for CoreWeave, it's like you're standing up an entire business, and it sounds like, and I could be wrong, so Tom didn't say this, I said this, they don't have a buyer for that compute. They don't know who they're going to sell to yet. Now, obviously, they definitely have business development teams and a sales team looking for those buyers. But that seems to be like kind of a chicken and egg thing. You're standing up a business, but you're not even really sure how liquid your compute's going to be, and that
or
kind of
they or they might have an end buyer. Like maybe there's this whole round tripping thing that's been brought up with Nvidia and how how they've like invested in other companies, which they kind of inflates the value of what they're doing. But even in a round trip scenario where they CoreWeave essentially buys GPUs that then ends up becoming part of like Nvidia's cloud for people to use GPUs, Well, that's great as long as people are still utilizing the GPUs to do whatever they're doing with models. Models are getting easier and faster to train. So, there's still like a risk there, even though they'll probably have a great counterparty as a customer. But at the end of the day, like, they're kind of building for the future of where they think things are going. There isn't a guaranteed buyer for that compute, I don't
Mhm.
believe, into the future yet.
Right. So that's a good point. A lot of this is betting on the exponential growth of AI, right? And so I guess that kind of lends into another question that's kind of off the cuff, but this is kind of, I keep going back to this, who's going to buy it? I keep going back to the what size data center is necessary for compute loads. So am I wrong in thinking that perhaps if you were trying to train a model, let's say you're an upstart AI company and you're creating, I don't know, some sort of graphics rendering AI tool, or like, I'm a writer, right? So I'm creating some sort of Bard-esque, AI tool to optimize for writing and editing and things like that.
Mm-hmm.
Would I be better off going straight to a 100 megawatt data center for all of that training compute? Or would I be just as comfortable going to a bunch of different clusters and pooling that together? Does that make sense? I don't know if you know the answer to that, but this is something
Sure.
I'm trying to wrap my head around in terms of mental models. And I keep anchoring it in Bitcoin, where just basically, I think the analog here is a mining pool. A mining pool, as long as its straight ends are set up correctly and its infrastructure on the inside is not just horribly architected, they don't
Mm-hmm.
really care where you are as long as you have decent internet connection, because
Right.
they're pulling their hash rate from all over the world.
Yep.
Is it the same thing for these AI models that are being trained, or is it really better suited if you just have one big cluster of compute rather than a bunch of disparate ones?
I think if you're trying to create what they would call a federation model, I mean, you're talking something like OpenAI is trying to do, or even what Elon's doing, like what he just announced this week. Um, that's one thing. I think if you're talking about a developer who's coming up with some type of AI related tool, or kind of like a niche model, there are platforms like, I think, Crusoe Cloud, Lambda Labs. There's a number of places where you can basically rent GPUs by the hour and do everything you need to do on your end without ever having any exposure to the underlying kind of hardware. And it is a burgeoning and a very fast growing part of the market.
And sorry, those services where they're renting, I mean, these are basically, if I could imagine, you're going to as many compute providers as possible and saying, like, we want to rent your compute for our customers. Here's what we will pay you. We need this amount of uptime, et cetera, et cetera. Is that the kind of, that's obviously
There's a
dumbing it
couple,
down, but
yeah, there's a couple different models. Like Vast AI is that. It's more of like a distributed model where they're connecting with data centers all over the place where they get contracts with, and if you go there, it's kind of seamless as a consumer. You're just picking the hardware you want, and then they match it up with whatever meets your criteria. I believe with Lambda Labs as well as Crusoe, they own the infrastructure, they own all of the GPUs and hardwares, and it is their own proprietary cloud. And then
okay,
you're running their, obviously their compute.
got it. Okay, so we put a pin in the mullet miner thing, and I want to return to the mullet miner thing because, as I understand, as you just described, the basic concept is you have Bitcoin mining and AI HPC compute all under one roof. And the good thing about this is you can get power allocations that you can use for dual purpose. And if you need to, when the HPC compute is not selling or is down, you can just run your Bitcoin miners. Is that the general idea, or I just completely butcher it?
No, I think that's kind of a permutation of it. I still think it's early. Like, for example, a lot of the folks I talk to about who are in the know about selling, kind of large hyperscale type projects, they're still at the floor. You're still talking like over 100 megawatts to do an HPC AI build out. So that means there's still a lot of room for Bitcoin miners to kind of go after power, in those lower ranges, anything sub 100. And I think where things are going though is that because there is a shrinking amount of power available, that a lot of these hyperscalers are starting to move down the stack. They're saying, okay, Well, maybe if we can't, because like before it was like 500 megawatts and up. Now it's like we're down near the 100 megawatt range. Well, when they start coming down in like the 50 megawatt range, that's when you can start doing some more creative things. Like I said, like where you could have AI in the front, Bitcoin in the back. And when you're not doing AI compute, or if there's some demand response things going on, and then you leverage Bitcoin, or I'm sorry, when you leverage ASIC purchases as a way to subsidize your business. So like, for example, like if I was to do that business, and this is completely hypothetical, I'm not making any public statements as far as like, this is what we're doing at Cathedra. But if I was
This
to
is
think about
all
it,
Tom. This is none of this has anything to do with any of Cathedra's investments, business stuff, opinions. This is just Tom.
yeah, this is what Marty, our partner and member of the board at Cathedra would say is like, we're going to get cosmic. And I think what's unique for Bitcoin miners and why people are excited about this mullet miner thing is that you have a way to think differently about things, right? Like I would make the play where, if I wanted to act as like some type of elastic energy grabber, I'd say, okay, well, let's build out infrastructure for Bitcoin mining very, very cheaply, and then same thing on the for the ASIC side. So I wouldn't go out and buy the top of the line S21s. I'd buy a bunch of machines that were probably just good enough. I could underclock them, do some firmware stuff, and therefore, best utilize an environment like that. And I think, if you've got another business that can subsidize the other part of your business, it gives you a competitive advantage. So therefore, maybe you could charge more on your HPC AI rates, or maybe the other way around. Maybe that your Bitcoin mining is subsidizing things in such a way where you can be more competitive, and maybe try to get more of a land grab for customers on the HPC AI stuff. Because like pricing is still very competitive. You're talking for like a traditional, hey, I'm going to go stick some H100s in a co-location place, you're talking 30 to 40 cents per kilowatt hour. Now, there's a lot of things that go along with that. There's HVAC and all kinds of redundant stuff that goes on with it. So it's not like a direct correlation to a Bitcoin miner chasing at 3 or 4 cents per kilowatt hour. But you can see why people would be incentivized to figure out a way to make those margins thicker.
Yeah, and I want to just highlight a point. You said that this makes more sense the smaller, really kind of you go down the megawatt ladder. I mean, not if we're gonna be like at like a 1 or 2 megawatt maybe, but there's a sweet spot in like maybe the 20 to 70 or so megawatt range or what have you, and it's not as attractive for the larger players that are working in 500 to a gigawatt range or whatever. Could you explain why that is? Why this strategy works specifically for miners who are smaller scale? Why it helps them stay more nimble?
Well, I think there's the ability to attract there are different segments of customers in the HPC AI world, right? Like you've got your mega compute folks that are out there. They're going to try to go get, like, basically, just when you think of large scale AI HPC, you just think of what Elon's doing down in Memphis, right? Just a place they can, turn on 200,000 GPUs and let them rip. And they all have to be connected. They have NVIDIA has this product called InfiniBand, which is essentially like allows those GPUs to act as one. And it's just incredibly expensive, very, very elaborate, like specced out to like perfectly for a for the infrastructure build. That's to create like very large models. But like where I think things are going to start coming downstream is like, I think I mentioned this in the article that you wrote a couple of weeks ago, where it's like, well, what if there's an oil and gas company that wants, or a hedge fund company, or what I'm saying? Like you start like chunking these different categories and saying, what if they want to create a specific model around their business, their core business of what they're doing? They don't necessarily need 500 megawatts. They might only need 20 or 30. And at least when you're in that chunk, in that, like, I'd say like 50 megawatt range, if you're buying on grid, there's a pretty good possibility later on down the road, if you're near the right, I would say, like hub as far as where your infrastructure is, you're going to be able to expand. All they got to do is put more transformers there, and you can easily double your intake. So I think from from a strict real estate standpoint, there's a lot of like good things that can come from that.
Yeah, so it's interesting that the analogy that pops into my mind is like wholesale versus retail. You're not going to put a Gordon Foodstuffs or some sort of restaurant wholesale distributor for food and for groceries into a region that doesn't have any restaurants, right? You're going to actually want to put grocery stores that can have supply for retail consumers, or for people who just don't need as much as a restaurant. And that's kind of a strange analogy, but it seems to me that the case is, if you have a huge footprint with hundreds of megawatts, then you're only going to be able to probably reliably sell that to someone who needs all of that, right?
Mm-hmm.
And there are only so many entities in the world that are going to need, or their businesses are going to necessitate having megawatts on that kind of, or megawatt computation on that scale, or so many megawatts of computation, excuse me. So I want to circle back on the mullet miner thing. We're going to be talking about it a lot. And I just want to kind of definition set again. Mullet miner is a term coined by one of Tom's friends. Tom has.
Oh, I don't know if he would agree with that. I don't know if I'm on friend level with him, but definitely a colleague.
Okay.
Yeah, we're like Twitter rivals, so I don't want to like. Yeah, I've got to keep that troll game going.
An adversary.
Strong, so. Exactly. He knows who I'm talking about. So Nick Gates over at Priority Power.
So, and the idea is kind of like you said, AI in the front. That's the business in the front, and then Bitcoin mining in the back. As I said during our panel at Bitcoin 2024, it conjures David Spade energy. But so for the mullet miner approach, I kind of want to break it out into just also mullet mining as a concept for Bitcoin mining companies, where maybe the site itself isn't a mullet mine, but the company itself has that approach. We're starting to see a bunch of different strategies break out. I'm going to break them down, and then I want you to kind of comment on the viability of each as you see them.
Yep.
So there's the easy strategy that a lot of miners have started with, which is leasing an active data center and then selling that compute to someone else. This is not unlike someone renting an apartment in Manhattan and then putting it on Airbnb when they're out on the weekends or something, right? It's kind of strange. Doesn't seem like it's necessarily viable long term, or sustainable, but it's a great way to bootstrap. And if you say that you're going to start doing AI stuff, it's a good way to get revenue on the books quickly so that investors can see that you're actually making efforts towards that. There is the pure mullet miner play, where you take an existing data center and you outfit some of it with HPC load. So you're basically stripping some of the rack space of Bitcoin miners, and you're putting other compute in there with GPUs and whatnot. And then there is just the full-on retrofit, where you're not even going to do any Bitcoin mining, but you're going to take an existing Bitcoin mine. You're going to take all the Bitcoin miners out. You're going to set up all of the redundancy measures that you need to for the infrastructure, for things like cooling, for things like networking. And then you're going to outfit that with GPUs. And then there is the Hut 8 approach with TerraGo, where you're just going to purchase a bunch of data centers that are already active and then just take over an existing business line. In your opinion, which of these, if any, because like you said, it's super early, do you think is going to be the dominant form and the one that wins out in terms of viability?
I have no idea. I mean, really, like it's so early, but at least these folks are doing different things, right? Like if you think about it, Core's going back to their roots. Their roots were, hey, we build infrastructure. They built it for a long time. They were former data center guys that when they first started, and as a company, they are the mullet miner company as far as like how the definition goes. And I was actually sitting on a panel with Adam Sullivan at Bitcoin Park. I think the video is going to be released pretty soon, but he made quite a prognostication. How would you put that? He made a statement saying that if Bitcoin hits 100K, that he will grow out a mullet. So maybe that's why they haven't released it yet, because they're maybe trying to edit that part out. But too late, Adam. The mullet is coming for you. But they're smart. They've got a lot of prop mining already up and running, and they already had a bunch of power. This all comes back to power, best utilization of power. And any public mining company, I would think, is not doing a service to their shareholders if they're not thinking about, hey, we have this access to this power. Obviously, the world right now is seeing a premium in power capacity, access to power, how do I best leverage our skills to make sure we get the most out of it? And Core looked at it and said, wow, you know what, we could go ahead and build out a bunch of prop mining, but they said, no, we have a great customer that can come in, they can pay for most of the CapEx. Obviously they were coming out of bankruptcy, so you know it was a very smart deal. Bit Digital started off in the first category, right? Initially, like they kind of, you know, they had a small customer where they kind of placed GPUs, you know, for them in kind of a third party location, and now that customer, or you know, because they built that business, now they've able to kind of like level up a little bit, and they've just announced a, you know, a new partnership, and that'll be, you know, working in an infrastructure that they already own. So you're kind of seeing that. Hut 8 is similar, like you mentioned, they bought a bunch of these companies. I think when you have I think the most important part, if you're just thinking about it from like a business standpoint, is you're just able to be more diversified in your revenue streams. And unless you get like kind of a buzzsaw on both ends, meaning like AI goes in the tank and so does Bitcoin, well then, yeah, your business isn't great. But if you have stable cash flows, or you have the ability to have a couple different levers, I think that's good long term. And if it allows you to continue to stack more Bitcoin or put more Bitcoin on your balance sheet long term, I think that's ultimately what decides what is the best play out of all of these. You know, and some people are going to make the bet on, hey, I think I can build a tier 2 light or a tier 3 light data center that will attract, you know, large hyperscale miners, or maybe, you know, maybe one step down from them, and be able to build it for like $1 million or $2 million a megawatt. And therefore I'll create this like, you know, radically new segment that'll be extremely profitable. And if that allows them to stack more Bitcoin, then they win too. So at the end of the day, it's whoever is able to stack more Bitcoin on their balance sheets.
I want to highlight something that I should have maybe been obvious, but sometimes the most obvious things aren't obvious until someone presents it in such an eloquent way. You know, I think a lot of I have been cynical and skeptical of AI and HPC plays. Bitcoin mining companies are notoriously kind of marked by their how to put it, they sustain themselves on hype a lot of the time. Hype for ASIC purchases, hype for Bitcoin's price, all these other things.
Mountain Dew miners, all kinds of
Yeah,
stuff.
exactly. The market's getting a little more sophisticated in terms of how they value these miners, but at the end of the day, we still see so many valuations propped up on hopium and the promise of some sort of future prosperity for the company from a business line. AI and HPC is a perfect example of this. If you look at a chart of AI or HPC focused miners over the last year, they've outperformed the prop miners, or as we say, traditional miners. But you made a really good point there, but the power is everything here. And I don't think that I appreciated beforehand that a lot of these miners actually have a head start on maybe some of the other companies trying to stand up these HPC data centers, because they already have the power allocation. Sure, maybe they don't have all the infrastructure in place that they need. They have to get, you know, more with regards to they have to put in more with regards to networking infrastructure. They might even need to beef up their electrical infrastructure, but they have the power already allocated, and they have some of the infrastructure in place. In your opinion, is that going to be a key piece in kind of the computing race that we're going to see, or even, I guess you could call it, the electron race that we're going to see over the next few decades? Because if you look at a chart of America's power capacity, we kind of have plateaued for the last decade. We haven't built as much capacity as we really probably needed to service this new digital business line. So do you think that in kind of an unintuitive way, maybe not unintuitive, but Bitcoin miners actually kind of have a good head start here over some of their counterparts who are trying to just start from scratch?
Oh, absolutely. Absolutely. You know, if you think about, if I would have thought about this earlier, I would have given Will like the best headline for this video, because it reminds me of President Trump's comments around Bitcoin mining, and specifically energy. Like, you know, we got a bunch of feedback from some folks who were at that original Mar-a-Lago dinner with the Bitcoin miners. And at first, they were trying to feel each other out. You know, they couldn't really like, you know, be in harmony. And then there was this point when like the light switch flipped for Trump, where he realized that like these guys are like the gateway for us to unlock the ability to produce more energy. And
Mm.
he like intuitively got it. And there were some really smart people there and some great, great people in our space that like helped him see that. And I've even seen it develop in conversations that we've had with utilities. The folks at TVA, Tennessee Valley Authority, are extremely, I would say, forward thinking when it comes to how are they thinking about building out the next phase of infrastructure,
Mm-hmm.
for the grid. And they're talking about, like, I mean, massive scale investments in nuclear and all kinds of other kind of opportunities. And where Bitcoin miners, and I think, if you want to attach us all together with the HPC AI stuff, is that we become a guaranteed customer for them along for the ride. So if they're waiting for high voltage lines to get built out for some of these build outs, they can bake that into their economics right from the get go, because we can just plug in right next to them as they're ready to go. And 5-10 years later, when the high voltage is built and ready to come out, they've already like paid off a big chunk of the capex on it. Or in there, I know it sounds crazy, but there are very high up folks who are absolutely are saying like, hey, this is a viable opportunity. And when you have, there's this weird paradigm that we've switched. Like the Bitcoin miners have always, or even, well, yeah, Bitcoin miners are even more fringe than just regular Bitcoiners. We were
Right.
like the weirdos in the corner before. It's like that meme with the guy in the corner and the two guys with the girls. But like
You
right
don't
now, it's
understand
like
the power of proof of work. Yes, we do. Shut up, nerd. Like,
exactly. Now it's now we have like presidents and heads of state, and like there's this like whole elite theory thing taking place where we're having influence on this election. And it's not just influence for a certain person to get in, but it's a certain if Trump gets in, there's a belief that he's going to usher in a kind of like a very robust energy policy. And the Bitcoiners believe that like part of that robust energy policy that he's going to put forward is going to include ways for Bitcoin miners to work with each other. And the one thing that I think a lot of people have overlooked with Trump's sentiment about Bitcoin mining, aside from go play with your crypto, is or go play with your Bitcoins, is he made this comment, and he said it like a couple of times. It was just like, I've never been around an industry where I can be all together with you guys, and you guys don't want to be like killing each other. He's like, for the most part, you guys all want to work with each other and help each other out. That's not normal. And to us, I think we've all, I mean, anybody who's in mining, we talk to each other all the time. Hey, do you have machines? Someone needs some space to, we're all trying to work with each other. And so I think that kind of harmony, although like we're competing in the network itself, we're still kind of on the same team. And I think when it comes to some of these big picture projects, which people would have just, it was crazy to even espouse some of these thoughts like 7 or 8 months ago. The fact that it's
right.
it's a
The Overton
reality.
window has shifted incredibly. I mean, we have gone from Bitcoin is going to cause a brownout in the US and no one's going to have power. Your children are going to be scrambling in the streets for scraps because Bitcoin miners are taking up all the power blocks, to actually, this is going to be an instrumental piece to the energy transition to lower cost, lower emission energy like nuclear.
Manhattan Project 2.0, Bitcoin mining is going to be at the center of it.
And I bet no one, myself included, had on their 2024 election bingo card, actually, this incredibly energy intensive process is going to be a crucial part of ensuring that American infrastructure can advance to the next stage it needs to service this new era of the digital age, this new frontier that is still so far out in a lot of ways, but is also here. It's kind of scary. And this is kind of more philosophical, but or it's just an observation to me. You always have these comments on proof of work being wasteful, or people saying, even within the crypto industry, well, you should just go to proof of stake. Proof of stake is an innovation. It's amazing to me that proof of work isn't just a solution to the Byzantine generals problem and a way to create a permissionless, censorship resistant, and trustless monetary system, but it's also the key to unlocking energy abundance. And this is something that Bitcoin miners have talked about for a long time. And you sound crazy. I mean, you sound like an evangelical. You sound like a snake handler, right? Like some Pentecostal fool thrusting his hand into a bag and hoping that he doesn't get bit by a copperhead or something. But the more you talk about it and the more you see these things play out, it makes sense. And I don't think I ever dreamed that Bitcoin mining would be featured as like a national security problem in a way, because that's really what this boils down to, is that, and this is why you've seen a shift in back to nuclear from the right and the left. It was always kind of I think the realm of the right. I mean, Tennessee is a very red state, my home state, where you are based now as well, and they've always been pro-nuclear. I mean, the TVA, God bless them, produces like 50% of the energy from nuclear for the entire state. But at the end of the day, the thing that is going to maybe shield Bitcoin more than anything else, Bitcoin mining specifically in this country, as long as the right sensible people come along to make these policies, is the fact that AI is a national security threat. Like, just that's it. That's the whole thing.
Yeah.
And it's amazing to see Bitcoin mining kind of become a part of this discussion. But
it's a great connect there too, because there's an embargo, or not an embargo, but there's trade restrictions on where chips can be sold, where they can be plugged in. I'm sure it's probably going to get even more stringent. So moving forward, like, they're going to have to allocate more and more power build outs for this. And so I think the more that Bitcoin miners can play the power game the right way, they're going to be able to play at the table.
And so this kind of just to kind of put a cap on this, because I think that one of the fears, or maybe not fears, but one of the emerging narratives is, how are Bitcoin miners going to compete over the next decade with all of these computing interests and all of these players building up AI and HPC infrastructure? And a lot of people, myself included, have kind of had this bearish outlook that, well, this is not going to end well for them. But it may be, in fact, that they coexist and thrive alongside because they are a necessary piece of this transition. Is that kind of how you would see it?
Yeah, I think it's easy to take the black pill and be. I think originally I was like, oh man, they're just. You can tell, like, the narrative is very different for them. Sam Altman pretty much his perception wise, like, owns all the politicians or all the important people, so he can have gigawatts and gigawatts of AI compute and no one will care. But if it's a Bitcoin miner, they'll push them out. But I have come around to that, kind of more of a white pill take, which is, it's basically peanut butter and jelly. And I think they'll work really good in the future together. And I think ultimately it will allow businesses that started out as Bitcoin mining businesses to stack more Bitcoin than they would be able to stack just proprietarily mining Bitcoin, if that makes sense.
Yeah, that totally makes sense, because you can basically, you're bringing in alternative revenue streams not tied to Bitcoin. Maybe you can use those to pay your bills on your Bitcoin mine and you just keep your mine supply. Maybe you do the master strategy, micro strategy strat, where you just buy a bunch of Bitcoin, issue debt, buy Bitcoin. Okay, I want to shift the conversation really quickly to the heartbeat of this entire thing, which, now I don't know, I guess it is the heartbeat, or maybe the brain. Electricity is the blood, but the heartbeat, brain, whatever other organ you want to call it, are these GPUs. And NVIDIA kind of owns the GPU landscape currently for a lot of these AI HPC compute loads. I'm going to share my screen really quickly to what may be the most terrifying terrifying analysis I've seen on this, is how much of all of these indices are how much penetration NVIDIA has had into all these different indices in the US stock market. This is crazy. NASDAQ, S&P, the NASDAQ 100, the NASDAQ overall composite, Dow Jones, all of these different indices have NVIDIA in it, and they're all getting hammered over the last few days, because NVIDIA has been getting hammered because it's been going on, one of the most insane bull markets that I think, or one of the most insane stock rallies that we've seen over the last few years. Why is NVIDIA so dominant? How is it? There's another, again, always an analog, or an analog with Bitcoin mining. They were very much the Bitmain of this space, and We're not going to get into why Bitmain has a kind of entrenched monopoly. Obviously, MicroBT disrupts it a bit, but why does it seem like there are no competitors to NVIDIA?
I mean, the ironic thing is, it's really a timing thing. You just, and I think Bitcoiners, especially people who are building Bitcoin based businesses, can really appreciate what NVIDIA has done over a long period of time, because they didn't have a sexy like breakout business. I mean, Jensen has been running that company for, I don't know, like 15, 20 years, just kind of, plodding along. And they were basically a gaming company. That was like where majority of their revenue came from. So, from gamers. And, you know, the idea around AI compute just really burst on the steam, in the end of 2022 and beginning of 2023. And they were the ones who, like AMD and some of these other guys, they just said, oh, this is not a big enough business. We're going in a different direction. And NVIDIA just stayed the course, focusing on it. They have a tremendous amount of, I think, like long tail to their company. So they've got incredible distribution partners all throughout that are very close to their company. They've got a lot of like supplemental or ancillary services and components to their entire ecosystem. So everything works well together. You can plug it in, you can immediately do what you need to do. And so, I mean, it's just incredible timing. That's really what a lot of it has to do with. And then they built a really good, core business for a really long time. And I think that's a really good lesson for anybody, for any of the public Bitcoin mining companies. It's easy to look at these, trends over 3 months or 6 months or whatever, but it's like we're at such infancy stages of our industry. It's like, well, if you go back and look at NVIDIA when they first started, it's like, well, we're kind of all in a similar boat to then. So, these are where we're going to like all kind of sharpen our focuses these next like 2 to 3 years in this cycle of what kind of companies we're all going to become. And, I think, there'll be some crazy advances in the future that will allow, pretty amazing opportunities. But I know there's a lot of money coming in to answer your question specifically. I know there's a lot of money coming in from the VC side to challenge NVIDIA, because there is not a direct competitor other than AMD, which isn't really, I would say like a viable one at this point. And that's a lot. That's a lot to ask for anybody who's looking to step up their game. So of course, their most natural competitors are going to be Amazon, Google, Microsoft,
Right. $1 trillion
Tesla.
companies that can command the attention of the foundries and really stand up.
Yep.
It's not just the foundries themselves getting the chip allocations, but it's also building up the manufacturing capacity and the assembly practices to make sure that you can pump these things out, right?
Yeah, and I actually, there's part of, I think NVIDIA gets a bad rap sometimes because they're like, oh, they're this monopolistic, competitor. But like, you know what? Microsoft, Amazon, Google, they're all buying. They could buy every single GPU that NVIDIA could sell, and there wouldn't be anything else to sell. But yet, NVIDIA has made a point of really trying to develop the independent ecosystem so that they don't get commoditized out of this game. So it's actually good for, I think, like, from a monopolistic standpoint, I think it's actually good because, like, the competitors that are going to come out of it are going to be folks who want to eat their own dog food. And I think NVIDIA will end up being like the people's choice for GPUs for a time to come.
Benevolent monopoly. And it's also interesting, that I don't know anything about NVIDIA's business practices. Maybe we dig in and we see that there's a lot of stuff that they're doing to undercut competition. But at the end of the day, I think the old adage, luck is when preparation meets opportunity. Like that. That's kind of what we're seeing with NVIDIA. They had a great core business and they capitalized on it when the time was right. And, if people are crying monopoly, number one, they execute it properly. Number two, the market is just pouring money into it. So it's like at a certain point, it becomes a self-fulfilling prophecy because they are so heavily capitalized at this point that they can kind of take this ball and continue to run with it. And is that, can you really say that's their fault? I don't think you can.
No, not at all.
I'm just, I keep going back to the Bitmain comparison. If for anyone coming in and trying to challenge them, I think to your point, it's going to have to be someone with chops, because we've seen, like, with the ASIC manufacturing space and Bitcoin mining, a lot of competitors come and go. It's a very difficult nut to crack.
Yeah, I would say if you follow theory of disruptive innovation, there's always this part where the incumbent, and NVIDIA in this case would be the incumbent, they will eventually get disrupted by somebody coming in and offering something well below what they're willing to offer, whether it's in cost, performance, whatever. And NVIDIA will just be like, oh, we don't even want. It'll actually be for an entire customer segment that no one else even wants, and then somebody will come in and fill that, and then that will slowly eat up the chain. I mean, if you think about it, OpenAI essentially disrupted Google's search monopoly
Mm,
in a very quick period of time,
yeah.
and it's because Google wasn't willing to drown their baby, because
Mm.
in order for Google to disrupt their own business means they would have to kill their search business by, where they make most of their money is
Yeah,
in
which
those
is
three.
like the nucleus of everything that they do.
Exactly. Those first three search results on the top of a page. And they weren't willing to just do what OpenAI was doing, which is kind of give you this beautiful, answer to what you were looking for, because that doesn't make them as much money. And as you could see, OpenAI was able to come in, and it grew so fast because it was so viral in the way that it helped solve a problem that eventually, it's just the way, if you look at companies and how long that they'll last. It's very rare for a company to maintain like a peak performance for a really long time. Eventually they
Mhm.
get stagnant. You hear these stories out of Google now where Eric Schmidt is talking about him having being like, there's too much work-life balance there. They used to be not killers, but there used to be like, hey, we're going, like, Google is our life. We stay here, we work, we dominate till we win. And it's not like that anymore. And eventually all businesses get like that. I think
Mhm.
there's some report that's like, there's like thousands of NVIDIA employees that are millionaires, and there's like hundreds of like multi $20 million worth employees. So eventually, if you're working there, what how would you, how would you like want to think about work? Eventually just be like, what am I
Right,
doing?
I'm done, dude. Like, I
Exactly.
got mine.
Hmm.
I got the bag. I don't need to chase it anymore. And
Yep.
it's interesting you say that about Google, a little personal anecdote. One of my friend's sisters works for Google, and I remember her talking about taking, like, a 6-week unpaid leave, like, almost like a sabbatical. I was like, "That's awesome." Like, really happy for her. She's, uh
Hmm.
but I just thought that was crazy. I was like, in any other company, because I've only ever worked in startups, it's like that you're done. You're
Yeah,
gone if
you're
that
fired. What
happens.
are you
Yeah.
doing?
Yeah. And I was like, "Well, at least it's unpaid instead of paid." Then I was like, "Well, but wait a second, like, that's a crazy benefit."
Absolutely.
Um, so, returning, or not returning, but continuing in the video, I wanna share another take from, our good friend, Zachary Bradford, CEO of CleanSpark, who said the H100 is the same as the S17. Now, for some context here, the S17 was a model from Bitmain, I think, roughly like 2018, 2019 or so,
Hmm.
and it was notorious for failure rate. I mean, and some miners would report anywhere from 20 to 30% of these dead on arrival when they got a shipment in. The heat sinks were used with a defunct thermal glue, a deficient thermal glue, and when you would rev them up, sometimes the heat sinks would fall off, the entire machine would just stop working.
Hmm.
So, what did he mean by this? What is Zach saying about the H100? Is this a terrible unit, or is it just already obsolete? Is that the point?
Yeah, it's a little cryptic, especially given. Well, first you got to realize Zach is like very much like a stoic. So there's this element of him. Just I sat on a panel with him where I kind of got some insight. So at first when I saw this, I was like, what is he saying? But then the more I thought about it, and just given like their public statements around just staying very true to what they're doing, which is just focusing on Bitcoin mining. Um, I felt like it was a little bit of the door opening to saying, look, it's not that we're completely opposed to this
Mm,
AI HPC thing. It's just that, and it's kind of the point I was making earlier, it's still very early. And do you want to go and build out infrastructure and spend all kinds of money to then have that infrastructure be completely outdated for these new generation Blackwell chips that are going to be released sometime next year, and then all of the H100s are completely just dead in the water. And I've got my finger to the pulse on like some of these GPU sales, and the market moves extremely quickly. I mean, you can go a couple, like within a month or two, one model with one specific spec, the way it's set up, it's completely obsolete. Nobody wants that anymore. So I think that's the point he's trying to make with that tweet, is like, hey, a lot of
we
folks
don't
bought S17s. It didn't work out so good for them.
right.
You would have been better staying with your S9s till the S19 came out.
Right, right. And in some ways it's a self-aware tweet saying that we don't, we're seafaring people. We don't go up into the mountains. Like, we stick with what we know. And I think that there is value to that. CleanSpark, I mean, full disclosure, they sponsor the mining pod. So, but this is not me saying this as a, as a beneficiary of their sponsorship dollars, but they've built a very good mining business through some very smart acquisitions over the years. And I think it's been interesting to see them kind of plant their flag in the ground, at least for right now. Like you said, this could change quickly, but them saying, this is what we do and we're going to stick with that. But you also got to like the guys who are going out on a limb and saying, this AI and HPC thing, this is big. We need to figure out how to make this work for us.
Yeah. And I mean, I think Zach and Matt over there have been pretty clear. It's like, hey, we know what we're really good at, and this is what we're going to focus on. If you think about what the decision that Core made, Core Sci, like that was a natural pivot for them to get, to do more HPC AI. In fact, they were doing stuff prior to this stuff anyway. So same thing, Crusoe Energy, same ball game. So I think it's whatever comes natural to you. The thing about CleanSpark I really appreciate is they're kind of, although for being like the vanilla miner, you know what I mean? Like, they just kind of, they just keep buying sites. They order more S21. They do all like the normal things, but they're actually more like, they're kind of contrarian in the sense that, when they first came on the scene, they were nobody. And you had these two monsters, Riot and Mara were there. And they were selling Bitcoin when it wasn't cool to sell Bitcoin. Everyone was like, "Oh, you got to hodl."
I
or
remember
die.
this. Yeah.
Yeah.
They were
Like
one of the miners that actually had good treasury practices.
Exactly. And they were ahead of the curve on it. And a lot of the cool kids clubs, which, I was in, I'm like, oh, what are they doing? They don't know what they're doing. They're selling the precious. And then it worked out great because they were, if I remember correctly, they're the only public miner in that downturn. So coming from the top of 21 into 2022, that was actually picking up sites because they had good treasury management. They were very disciplined in their approach with how they saw the market, and they were going to attack it a certain way. And so that allowed them to continue to just pick up sites. And all of a sudden they're like a top 3 miner, kind of overnight. And it wasn't overnight. It's just, they slowly stacked over time and picking up those sites. And now they're the opposite, not to say that they're opposite, but like their strategy around hodling is flipped. So that's very specific. There's probably a good reason why they're doing that. You know what I mean? And it probably ties into some of their strategy around the HPC AI stuff too.
100%. And like you said, it seems like it's overnight, but it's like the Hemingway quote from Sun Also Rises: gradually then all at once. Except it's the opposite, because that's referring to a bankruptcy rather than monumental success.
Well, it can happen that fast in this industry.
Yeah,
too, so.
exactly. Well, hey, Tom, we're butting up against an hour here. This has been awesome. Would love to have just some final thoughts from you. Anything that we didn't cover, anything that you think is really important for people to know when they're trying to make sense of all of this hype surrounding the AI HPC stuff.
Yeah, I think if you're trying to think about, like, I think there's 3 divergent categories that are taking place right now within Bitcoin mining in general. You've got your hybrid mullet miner take, which is a bunch of miners that are going off, and they all have little different aspects that make them a little bit different. Then you've got your prop miners, very big scale vertically integrated guys. They're doing their thing. And then you've got, like, kind of, we didn't talk about this today, but what Marathon and Fred has kind of started kind of positioning himself sort of closer to Sailor in the MicroStrategy play. Find that pretty interesting because, to me, because I'm, because I would consider myself a Bitcoin maximalist, I try to figure out, like, I don't care what we have. I don't care what kind of ASICs we have, whatever. I just want to figure out how we can stack the most Bitcoin on our balance sheet long term. Because as you can see, what Sailor has done with that company, he's done something truly special. And I don't think it's just a matter of time before, like, it becomes like a normal thing for not all the public companies, but a lot of public companies to do it. And so I think there'll be, Fred made that strategic move. He hasn't really talked about it like in the grand scheme of like how that looks against, some of the other changes that they've done with their business. And like, because originally they were an asset light miner, and then they started buying some infrastructure. And then, obviously they've raised a bunch of cash. So, they ultimately they looked at buying more infrastructure or buying more miners, and they thought, well, you know what, buying more Bitcoin with that is actually a better investment. So, I think that, depending on how you see the world, where it's going in the next couple of years, there's going to be something in one of those three categories that will be appealing to you. And it'll be great for competition. See what people do.
Awesome. Tom, where can people find you? Where can people get a look into your beautiful brain, figure all this stuff out?
Well, so on Twitter, it's Pharma Tom, and it's usually just me trolling. I try to like when I talk about Bitcoin mining, it's usually just from experience. There are no experts in Bitcoin mining, so it's because I've made a lot of mistakes. When I talk about not wanting to have exposure to ASICs, is because I personally felt the pain of having exposure to ASIC-backed loans on that didn't end up well for me or for the company I was working with at the time. So I think what you'll see in the Mining Mafia group, which is where I post a lot, is it's a great group because you've got a lot of folks who are into the public stocks, Bitcoin mining stocks, but now there's like an ever growing presence of like folks who are in the industry who are just like wanting to talk about like what actually takes place, what are like the real things. So ultimately we develop, I would say, like a segment of the investing community that is very well informed, very well educated. And what I didn't realize before the merger completed with Cathedra was how big of a slice of the market retail had with Bitcoin mining stocks versus other segments of retail, or versus other segments of stocks. And so I think it's pretty awesome that the group of folks who are in mining that are in that community, it's a very high signal.
100%.
So you'll find us dunking on each other and making fun of one another.
It's a fun community. Last thing, actually, and this is not related to mining or HPC or AI, but Tom is a prolific homesteader, and I have to know, Tom, what was the best thing from your garden this year, and what was the worst thing?
Oh, our beef. It's the best. I go out and visit them every night. We've got a decent amount of cattle. So yeah, our beef is by far the best. I like our pork too. My wife, as far as like the garden goes, peppers, cucumbers, that type of stuff. But I mean, it's really about growing our own food and having access to really good protein. That's the best thing.
It's key. As Killer Mike said, the most revolutionary thing you can do is grow a tomato. And we will leave y'all with that. Thank you so much for tuning in, everyone. Please give Tom a follow. Give me a follow if you'd like to at As I Lay Hodling on Twitter. Give Mining Pod a follow at The Mining Pod. Give Blockspace a follow at The Blockspace Pod. You can find all of our content on YouTube and at blockspace.media. Tom, want to thank you again. Really appreciate you coming on, man. And we'll be in touch and hope we talk again soon.
Anytime, Colin. Thanks, guys.
Deuces, everybody.
Peace.